What's up, my fellow traders? Hope you all having an awesome day. A quick one here on nat gas, gold, silver, crude oil, starting with natural gas. So I couldn't upload a video yesterday, as you guys know if you have seen my weekends video, that I was traveling and that was a long 24 hours travel, including the commute from my home to my destination. So that is why I had no energy to make a video yesterday, and that would be a zombie analysis, I would say. So I just want to do it very quickly now. I'll be flying to Dubai in next 2 days again. That's not a long flight from here. For my country, it's only 3 hours flight, so it won't be as hectic as it was from the UK to my country. So you're gonna get a video as usual. So starting with natural gas. So if you have seen my weekends video, I've said that we had a bearish signal from 50% retracement all the way from here, and I've also said that if you're in the trade, that might hit your take profit with a gap, and that exactly has happened. If you have taken this trade, I would come out at 1.618 retracement, talking about NEMIX. The reason I've adjusted the level because I'm using the Fibonacci tool to look for my aggressive entries, which is right here. Now, if you look here, 50% has been hit and price is rejecting from 50% retracement. Now, some traders like to see a pullback to 382 retracement to set their sell limit order. They sell here or right here, and then they take the profits at profit number 1, which is level 1 of Fibonacci retracement, or to manage your trades, to move your stop loss to break even, which is 1.618 retracement. Bearish engulfer will be less aggressive entry. Now we need to look at the trend line as well. We might see a pin bar or rejection like bearish engulfer if you're using a discretionary way of trading, which is a pin bar or bearish engulfer right at the trend line. And same goes with NEMIX. As you can see, we have just hit the 382 retracement on NEMIX as well. So at this point, we are still looking at the zone below that was already mentioned in my weekends video. Feel free to watch my last video and mark these zones on your charts. The green zone is an area from where we can expect some minor bounce, not a major ones. The major zone is right below, and the second major zone is right here below, which I'll keep you guys informed as well. But for now, we are looking at the zone that was mentioned already, and on Owanda exactly the same right here. Now, if you remember in my last video, I've also mentioned that we can look for a possible trade from this trend line. Now, if we have this candle close as a bearish candle, engulfing candle, we'll have a sell signal. In that case, I'll be going short from here, and that is also one of my valid pullback entry. Bearish and added confidence with a trend line right here that will likely to push the price lower. And looking at that, the volume is very low, is only 40, so I'll be expecting at least 1 ATR bounce, push down from here. That is exactly till here, preferably entering at the pullback, not right at the close. It's totally up to you if you want to enter at the pullback as well. So for now, I'm expecting a push down from here to the zone below that was already mentioned, and here the 50% retracement is right. I'm still expecting a price to hit 1.618 retracement. Looking at this bearish engulfer, we can see a possible push down, and that will be my valid entry condition if closed as a bearish engulfing candle, also at the trend line. So keep an eye on this candle, and same goes with capital.com. We haven't got any signals, but here we are only looking for pullback entry bearish, but we do have got a rejection all the way from trend line. Using discretionary trading from the trend line, we can possibly see a push down from here at least to 1.61 that was mentioned in my weekends video, the last video, or to zone below right here, these numbers in blue. From here we are only expecting a breather, then a fall back down. And on MCX audience, price is already heading to the zone below, and for now we are looking at bearish engulfer below 50 EMA. If that closes as a bearish engulfer, that is a valid sell signal. Or you can also look at the trend line. The price is forming this red candle, but if that turns out to be a bearish engulfing candle, that is even a stronger signal to go short. So for the MCX audience, look for the zone below I've already mentioned. Otherwise, I'm only expecting a further fall out of natural gas. As planned, we have got a head and shoulder bearish pattern on weekly, and that is exactly going as planned. Coming here on gold. Gold is pushing up, broken above 50 and 20 EMS. Not much movements at this point. So at this point, I'm not looking for any entries till I see the break above this high. Only then I'll start to look for my next buy entry. Otherwise, I'm sitting back and wait for the price to give me a setup. Otherwise, or I'll be looking at the break below and close below this low, 50 EMA, only then I'll be selling. So short will only happen below 50 EMA, and long will only happen above this high with pullback and engulfing candle. And I'll be taking my counter trades, counter sell trades if the price head to this level right here, these levels also mentioned, from where I'll be looking to short this market. For now, the bias is bullish because we are above 50 EMA. After this range is broken, we are looking at the upside or downside only once the price break below 50 and 20 EMA. Coming here on silver, we have got a nice pullback. That is something I want to see, and you can also call this a minor bull flag pattern that is not completely formed since we haven't got many touches exactly like this. So I want to see some more push up to this trend line, pull back. In that case, we'll have a clear bull flag pattern, and in that type of pattern we can see a breakout above or below, preferably above because we are above 50 EMA, and the 50 EMA is very close to this bull flag pattern. So that is why I'll be more interested to take my long trade if we have valid pattern. But for now, either I want to see a red candle and a green engulfing candle to go long, which is my pullback entry bullish, exact rules, or I'll be only shorting till when the price hit the level above right here, these numbers, from where I'll be shorting silver. Otherwise, I'm not taking any sell trades as long as the price is trading above 50 and 20 EMA. So I'm expecting a push up out of silver, not selling and not buying till we have got a clear buy condition. But I'll be only looking for buy trades at this point. Finally, we have a crude oil, and how nicely the price changed its trend. If you have been following me for the last couple of weeks, as you can see, since the break of this trend line, the price has turned bullish and we are now pushing higher. So at this point, we are only looking to buy crude oil when the price break above this high, pullback and engulfing candle to go long. So I'll be only taking long trades after we have a break above this high. Otherwise, I'm not taking long trades because the condition will not follow once we are above this high, pullback, engulfing candle and just going long. So only taking long trades, and once we are broken below 50 EMA, only then I'll be taking short trades. On a high time frame, we are still not completely broken above 50 EMA. That is why I'm looking to buy only once we have complete break and close above this high on 4 hour, and then a pullback and engulfing candle to go long. So very simple. For now, I'm looking for buying, but with engulfing, bullish engulfing pattern. If we are broken below 50 EMA, then I'll be looking for bearish engulfing candle with a pullback. So that's it for today's video. Hope you got a value. If yes, hit the like button for me, subscribe if you're new, so that we can all trade together and trade efficiently. Hope you do it great. I'll see you guys in the next one. Till then, take care.